What's up, Trader's Edge? It's Mark Sebastian, your only option. In today's video, I'm going to prep you for a little bit of economics, but I'm really going to talk about what's finally happening, the big market turning that I'm seeing right now. So with that, let's dig in. Well, folks, on Thursday, after a booming day on Wednesday, the S&P 500 sold off about 50 points. The interesting piece is that the S&P sold off, call it a little less than 1%. The NASDAQ, the triple Q, was down over 2%, 2.2%. In the course of one day, it wiped out 4 days of gains. Everything we've seen since July 5th gone in a day out of the triple Q. But here's the crazy thing. If you look at the advancers and decliners index, it was up. And look at RSP. So RSP is the equal weighted ETF for the S&P 500. So the S&P 500 is cap weighted. That means the more expensive the stock is, the more weight it has in the index. So think about RSP as having the 500 stocks and putting $1,000 into each of them. That's kind of what RSP. It's a little more complicated than that, but that's kind of what it is. Well, on the same day, the NASDAQ is down 2.2%. RSP is up big. All right. It was up north of 1.3%. Basically, the 8 stocks that have been holding up the S&P, those are NVIDIA, Apple, Microsoft, Meta, Amazon, Broadcom, Google, and Tesla. Those 8 stocks, they got smoked on Thursday. Everything else went up. Let me show you what this looks like. So take a look. Here's the action of the RSP down here. Here's the action of the S&P on Thursday. But I want you to note is what had happened since the end of May. Look at this spread between these two. We just saw those 8 names go up and up and up and up. And look at the performance of kind of the everything else index. Prior to Wednesday, if you had bought the RSP, despite the S&P hitting record after record after record, you were down over the last 3 months. Now it's up 1.5%. The S&P is up 6.5%. Now, I'm not saying this gap is going to close, but after CPI came out, after everything, the big stocks got what they want, but that was already priced in. That's why they sold. That allowed the big movement in RSP, the big movement in, well, not so much the Dow, but the big movement in the RUT. Look at the day the Russell 2000 had. I love watching this. It's there, and then it populates. Look at this. The Russell 2000 went from down on the month, down on the quarter, to up 4.3% in a single day. That is craziness. Now, here's the thing. Getting back to RSP, there is more room for this to come in. I would say we could see RSP rally another 2%. While the S&P flatlines or even pulls back. Why? I'm going to add in the Qs. I'm going to give them a slightly darker shade so it's easier to see. So here's the Qs. So look at the performance of the Qs. They went from up over 13% on the 10th. We're now up 10.5%. So there's a lot of, I think, convergence between all these ETFs that is going to start happening, a little bit of money rotation, at least until earnings start to hit. The one that we're kind of keeping an eye on for an earnings that we think could be a bit of a, do we see that spread start to widen? That's Taiwan Semiconductor. They report on the 18th. That's in about a week. That is the one to keep an eye on. Now, finally, economics. We got PPI on Friday morning. That's going to be, I think, important. We could see more of the same if they're telling us that the market isn't going to do very much between now and and through that earnings. PPI could actually push the trade that happened on Thursday further. If rates are definitely done going up and rate cuts are coming, and we don't have earnings to kind of pad things, we could see this unwind trade continue. Leading into PPI, the market's pricing at about a $25 move. That's probably too cheap. So with this big convergence, one thing that does worry me about this whole scenario is, what if we have those big seven dropping, and instead of rallying, RSP just sits there? So let's go back to RSP. What if these guys just fall to here and RSP doesn't do very much, or even RSP drops back to down on the quarter, and these guys catch up and drop to up 1% or 2% on the quarter? What does that create? Well, that's what I'm really worried about. So what do? The answer is two-way trades. What are two-way trades? Two-way trades are a way of creating consistent, steady returns, while if what I just laid out, the Mag 7, call them the Mag 8 tank, while the rest of the market doesn't rally, two-way trades crushes it. What are two-way trades? Click the link in this email to find out all about it. If you're watching me on YouTube, like, subscribe, and click the link in the description of this video. All right, everybody, I am Mark Sebastian, your only option. I'll see you soon.